Happy Monday, day traders. My name is Français. Believe that you got and spend a nice weekend with your family and your friend too. You came here for knowing what will potentially happen to this week on financial markets. So let me do that for you. It's your first time to discover the GSTA. We are a trading online academy where we teach people how to trade stock, bond, indices, derivative product too, including CFD, forward contract, futures contract too. So we kindly recommend you to take a look on our website, which is globalstreettrader.com, as you see on the screen here, and also visit our website, and we can also find us through the different social media as well too. Okay, so let's starting first by the our traditional disclaimer. Of course, futures, equity, ETF, option, CFD, and other derivatives used in trading have great potential reward, but also a great risk of losing your capital. So you need to be aware of the risks and be willing to accept them in order to invest in these products. So then don't invest the money that you can afford to lose, okay? And this program is neither a solicitation nor incentive nor an ad to buy and sell financial product that will be covered in this video, okay? So weekly market analysis number 8, right? For the March state this week, all this week for the 18th to the 24th. And this week will be a bit busy because we do have a couple of macroeconomic data releases, including the RBA minutes for the monetary policy today in the Australia. We do also have the ZEW, which is economic sentiment index, very important indicator and macroeconomic data. At the Germany is expecting to going down, so it's not good for the Germany, and including the economic overall economic Europe area. We do also have the inflation rate for the yearly on year, so the pace on year for the on the Wednesday for the GBP. We do also have the most important decision, like the most important macroeconomic information this Wednesday with like the Fed, including the FOMC economic projection. Also, we have also the parliamentary vote on the Brexit deal. We already saw that they have rejected the plan, the proposal plan for the Theresa May, and they vote massively for the Brexit non-deal Brexit. Okay, so it's increasing the probability that we do probably have another or a second referendum. So very important to follow this annonces, politic annonces, and macroeconomic too. Also, we have a Friday to finish the week. We have an inflation rate on yearly also pace for the Canada is expecting to be a little bit increase, and also the balance of trade, okay, in Canada too. So this week is very it will be a bit like busy. So that's why we need carefully to take a look on the chart and all these details. We're just going directly to the charts, and here is the USD CAD, and my position is to be bullish too for this week, okay? But we closed the market, and the last week, and last Friday was very difficult to close the market because, as you see here, it's looking some like a pin bar. Or also, if you take a look on the daily too, we close at the doji, right? So that's why we're difficult to doing projection where supposed the market go. And as we trade on the intraday day trading, we expecting that if the market get out of the big green rectangle here, we could have like a massive acceleration or bullish momentum upcoming on the USD CAD, right? And don't forget too that I'm I'm preparing all the charts at the Saturday, and my vision on Saturday was that the fact that the market could going until the $32 960 here before to going long on the USD CAD. And guess what? We going like a bit like close to that, and then the market has been like, I've been paid yesterday at the open at 5 p.m. I think, right? If the markets come until $33.015, right? Very close to this level. So my strategy this week is it's clear, right? I don't want like pay the yearly card at any price at all. I just waiting about the market going until this level here. So if you want if you want to be bull like me, you just have to wait the market decrease a little bit here and this low, and then buy this dip until the previous level. Because as long that we this level here, $32 960, keep the market, USD CAD has some like a willingness to going up, right? It's very translated directly into the DXY. We starting now to break this aqua blue line here, but on this weekend we just close above 96.45 points, right? And our limit was 96.40 points. So if we going that way with this kind of bearish momentum on the dollar, and also on the Canadian dollar index too, if you continue that way also like in the bearish movement, we could expecting some again a mechanically and technically rebounds or bullish continuation in the USD CAD, because Canadian dollar for sure has made like the overall movement that he did before as the head and shoulder here, massive head and shoulder. We break this major level here. Let me illustrating that for you. All right, and then we're doing a pullback, reintegrating that, but the has been supported by the and defended by the resistance, the MA 250, and then we starting to correct again to going low. So the scenario here, which is draw having a Canadian dollar index going down and the DXY also going down too. So because of mathematically reason and also mechanically reason too, we could expect a bullish continuation or bullish momentum on the USD CAD. But so you just have to wait that the market going here at this level, $32 960, and then keeping or looking to buy this dip here. Okay, so let's go now to the Dow Jones Industrial Average. So the DJI A30, which is the CFD of the Dow Jones, it's always also the same, because all the markets are just waiting about the how's going the discussion between China and United States, and we have a couple. We had a couple central bankers, including Caroline Wilkins, which is the vice governor seniors of BOC. She said that most of biggest country or industry, like big country, including United States, Canadian, and others country, been jeopardized about the global growth rate, because we do have like some geopolitical concern, including the difficult negotiation between China and United States, and also the global level of debt too. is already probably 3 times bigger than the global economic growth, right? So that's why all the major index are just winning the fact that if United States and China will reach the an agreement in their discussion, right? So that's why here in the index, we just also waiting about some certain level for confirming that the market want to going higher, right? And for going higher, the fact that we are studying some a bullish momentum, you just have to wait until um, the market coming here at 25,620 somewhere, right? And then you can starting to buy. So like at the cluster here, technically, for with the both moving average, which is the uh, weighting moving average for the quarterly period, and also the moving average for monthly period, you could start a strategy to buy this low here and then expecting that the market going lower here. Or if we fell and we just reintegrated this level and we break it, then you can buy too. But if we coming into here and we break this level, this zone will be supported by this movement. So we probably, increase the probability that the market could going down, right? So you just have to wait here and observing the market carefully and just react what we potentially doing, right? Here is my strategy on Dow Jones. So this week I'm neutral on Dow Jones. I'm just waiting if the low will be kept, and then we buy the low, buy the dip, or also if we break it directly the previous high, which is the 25,900, and if we break this midterm low, then I will short the market until the previous also lowest point. Okay, so here is the goal now. And the gold is always the same song. As I said, I didn't treat the gold as a day trading interveners of the gold. I'm just waiting the greatest point that we can have to buy gold, because my point of view of gold is a kind of long-term vision. And if we going until the daily, you can notice that we potentially doing some like a very tightening, head and shoulder, but it won't probably, materializing, because as I preparing the graph on a Saturday, I saw that it's potentially this pattern like will be drawn. If I'm going to this level, we have a nice acceleration, consolidation, another peak here. So I was expecting that the market going in this level here, and then the 1292 we play in the neckline of the zone, and if it's been kept, then the market could have a nice rebound. And guess what? That's exactly that we did, right? And then the market accelerated now, because this level for the 1292 or 1294 as playing a role a support, right? A major support. And we break it the moving average. But you have to be very careful also with gold, because if the dollar index and the US 10 years bond are starting to be good, for sure it could pushing higher the gold. But if it's also doing against that, like the vice versa, we could also have like a retract on the gold. So the orders, technical orders for the gold will be 1310, right? So at the 1310 level here, if the gold fell, you can definitely short the gold until the previous lower. What I'm talking about, it's this asset here, the US 10 year on the bond. For sure, we break this ascending trend here, right? Since the previous lower, which is the 12 July 2016. right? And we just follow the 250, right? 250% level. As long as we stay above that, we could not saying that the U.S. 10 years yield bond has been like an bearish momentum. It looks like bearish, but very careful that if not breaking this level, we cannot expecting that the 10 years bond yield could be could like first time pushing higher gold and also pushing higher the index, right? But if we go into the rally, like it's reintegrating this ascending trend here, it will also putting massive pressure on the index, like the Dow Jones or Nasdaq or S&P, especially S&P 500 too. Okay, so here the strategy for gold, just waiting that the market going to test the 1307 and 1310 here, and if it fell it, just short the market until like a period lower. So here it is a bond. So the bond, there's nothing to say as much because we know that we starting a TLTRO policy. So the bond, first of all, the bond is looking bullish. So, and this free moving average here is playing the role for support, pivot, and all the stuff. We just stuck to the weighting quarterly moving average. So as long as we stay here, it might be the great for you to buy each low that we made. But if we close below that and then the market break this moving average here, then you can short the bond until this level here. It's just all that you have to do, nothing else. Okay. So here is my global weekly market strategy observation. For the first card, Forex USD card, as I said, I'm bullish. This week will be a bit difficult to trade this pair because, as I said, we expect two movement from low to high, and I'm looking to buy first at, as I mentioned, $32,900 and sell around $34,300. We is almost doing this low, like the $32,900, right? And after that, if you want to short that, you can short also at $34,500, right? And the POC for on the technical chart for seller was like $33,500, and don't forget that we closed below that. We closed at the $33,350, right? Just 15 pips lower that we close. So here is the neckline, and the neckline of the double bottom weekly pattern will be $32,700. So we're just waiting that the market going, test this level and then going up. Here the strategy, okay, for the technical strategy, because the Canadian manufacturing sales expectance put a positive bias on the Canadian dollar, right? But the pace of the broad economy and also the BOC tone for the monetary policy worries some Canadian investors and bank system about the economy, as the Caroline Wilkins said about like the overall or global economy, pace. And the dollar as close, dollar index as close to the support, which is 96.40, and now we're starting to break it. So it was also kind of a weekly POC for DXY, right? So that's why. So I wrote this analysis Saturday for Monday. So at that time we were in this 96.40, right? 40 points. So that's why I said it here. If we break this level, dollar index will be sold massively. So very careful of that. So that's why we just have to waiting to be very patient, and then going with the dip on the USD card by the dip, right? On the dollar index, is looking bullish, but you just have to wait the first move on the retract until a minimum 25,720 or 25,600 maximum, and then buy this low, as I said. 25,650 is the daily POC for the bull traders, because people are they are very they were very boosting and optimist about like the fact that in the next 3 or 4 weeks, as the president of USA, Mr. Donald Trump, said that they will probably reach in a deal agreement. So that's why the market anticipate that. And the fact also that the bond yield looks bearish, it's also pushing higher the index. But it's always the same song. We're not expecting something technically. We're not anticipating. We just have to wait. Then the market break this major level and then take a decision. Okay. So on the gold, it's also the same thing. It's looking neutral or bearish bias. We do have like a little bit uptrend, but you just have to wait if we fell 13.10 or 13.7 or not, right? If we fell in this level that I showed before, you can definitely short the market. But if we break it, for sure, it could be the best time to buy gold until like the midterm resistance, which is 13, right? 1,330. Okay. And also from the bond, the fact that ECB has applying the buyback asset program, which is bond buying, and also doing the TLTRO free for the third time. It's just keeping the bullish bias on the Eurobond. So each low that we will doing at this global context, it's a great time to collect bonds, so to buy the low for the bond. So thank you so much for watching this video. If you like it, so please leave a comment, like it, share it, and also you can send me a question for anything that you regard to the global strategy on the financial market, and also take a look on our website. Thank you so much, and have a great day. Bye-bye.